Hi, this is Randy Finney with Right Side of the Chart, and today is Tuesday, February 12th, 2019. In this video, we're going to take a look at the long side trade ideas. This video will be shorter than the last one. Earlier today, I updated the short trade ideas, and because a lot of those short trade ideas are highly correlated with the broad market, I spent a good deal of time talking about the broad market on that one, taking a look at the outlook. On this one, we have, other than TVIX, which does have a high correlation, an inverse correlation to the broad market, and that's why it's here as a long. These have virtually zero correlation. We have platinum, RKDA, a small little ag input stock that has virtually no correlation to the broad market, and then UGAS, which of course doesn't have any correlation to the broad market. So we don't need to go over the outlook for the market here, just these individual trades. Let's start with PPLT since that's up first. Now this one I've covered quite a bit in the past. I haven't updated it lately. It's just turned out to be a, well, call it what you want. It was a successful trade right out of the gates. We entered it back here at 76.27, right about here, and quickly went on to hit our first target shortly after entry. Pulled back right off T1 as expected. That's usually the case. That's why there are multiple targets. Charge right up to T2. And this was a case where, and I talked about it in the previous video, commodity tracking ETNs don't always do a perfect job, so you have to try to correlate, and you have to look at the charts of platinum. And in this case, I had a level here that was at 83.49, the resistance line. So I did make an adjustment, 9 cents shy, but you can see, and I talked about it again at the time, we missed that one by just pennies there. It came within less than 30 cents on an $83 price. That's a small, very small margin. Almost hit our target there in reverse. So officially it didn't, so I left it on. And I mentioned at the time too that if it broke this, again, these were all updates in the past on this trade since it's been on so long. I said, here's an uptrend line. You want to watch that. If it breaks that, it's probably going lower. Broke down. And so I imagine a lot of people would have, probably stopped out to protect profits at that point. But the longer term outlook still looks good. I'm still longer term bullish on the precious metals, gold, platinum included, and I didn't see any reason to revise the trade parameter. So this one's still based on a stop of a daily close below 73.69, meaning any close of 73.59 or lower. And I did note since the last chart, we have a pretty nice shelf of support there, not too far above the stop. So keep in mind, if it breaks that, you'll probably see, since we've had a lot of reactions, probably a quick move down. And if they, take out the stop, so be it. It's starting to look good. In fact, let me just tell you this. If you're in this one or interested in platinum, I'm looking at this chart now. I see a really nice setup forming here. I see some potential. It's not confirmed yet because we need to see this PPO turn up. Although it is there, we have a much higher low in the PPO and the RSI against equal prices here. But what I could see happening, and this is what this market does. This is such a well-defined support level. It's too easy for the algos to say. A lot of traders are probably going long here on a pullback to this level with a stop just below it. So what they'll probably do, my guess, is take it down. And I'm not going to give this one any more room. I can always get back into it if we see some buy signals. They could take it down here, pop it below there. Hopefully it'll close back above and stay above our stop on a daily closing basis. But if not, a little pop down and then a nice clean divergent low, just like we went long off this divergent low here for this trade, just like we had a divergent low here. Ooh, that one didn't play out. There's an example of a divergent low that didn't play out right there. Sort of like so far the divergent highs on the market that aren't playing out. So yeah, and again, we waited for a buy signal here. This one had an entry based on a pop above resistance as well, and that was all specified in the trade. So back here, we didn't have a trade on platinum. We had a divergent low that didn't play out, but. And like I say, nothing is 100% in technical analysis. Not the best looking chart patterns, not the strongest divergences, not the the most solid trend line breaks, but more often than not, and I would say well over 90% of the time, when you have clean confirmed divergence, it leads to these type of trend changes here. And to be honest, this one did move up a little off that divergent low. It was a quick pop of about 3.5%, but not what you'd expect. But again, oops. There we go. Sometimes those chart goes blank when I click on the drawing tools. But again, not to spend too much time on it here. We really didn't have any buy signals back there. So let's move on. That's platinum, and again, that's what to look for. So this is call it a potential setup if you're not already in it, and if you are, and you're in this one for the long run. Whether it's diversification in your portfolio, like I said, I think precious metals make sense at this point in time going forward for the long-term approach next year or so as a piece of the pie for asset allocation that will have stocks, bonds, commodities, and other things like that, precious metals, etc. Okay, next up would be RKDA, but I'm going to do that one last because I want to cover some of the stocks within the sector because birds of feather flock together, and the fertilizer stocks, the ag input stocks have been moving, and this one's getting close to the first target, so I'm going to cover it at the end just to give you some other trade ideas in that sector and really more of a broad overview in the sector. TVIX. Let's start out looking at the VIX. Since what TVIX is attempting to track is the VIX. I mentioned this in the trading room yesterday. Somebody asked, "Hey, how is it possible the VIX is up or down or flat, and TVIX is doing a different thing?" You cannot trade the VIX. Nobody can trade the VIX. The VIX is a spot index. It is something that you can trade indirectly through one of three vehicles. Futures on the VIX, and they have different futures, just like stock futures. You have the near month, next month, the following month after, whatever the cycle is. Sometimes you have quarterly. So you have futures, options on those futures contracts. So when you buy the VIX options, you're not buying options on the VIX. You're buying options that are on the futures that track the VIX. And because they are futures, they usually have a premium. The price is going to be different from the spot VIX. And then finally, you have ETNs. And all the ETNs do is invest into the futures that track the VIX. So let's look at the VIX. Obviously, give or take, they're going to follow. There will just be some day-to-day differences. I wanted to point that out. So what do we have here? We have the PPO. It looked like it was poised to make a bullish cross here, but it didn't. It got rejected, stayed down. But now we're turning back up once again, looking to make a low-level bullish cross. What do I mean by that? Well, the PPO hasn't been this low since back here. Then we started putting in big divergence. We are also at support. Right there, 1573. This is a support zone I have, and we're at the bottom of it, clinging to it. Remember, the VIX is a volatile little sucker, so you can move up, and you can see sometimes you move through these levels, but I have a lot of reactions on that line going all the way back here for a couple of years, and so I think it's worth noting. It's pretty significant, and you can see this was that trading range here, and when we broke above it, boom, there was your buy signal, off to the races. So I think this is a very important support level and a pretty solid support level for the VIX. Once we popped above it, look what contained it on the pullback. So here we are again. It's trading 101. I can't promise you the VIX reverses from here, but I can tell you it's objective to go long on pullbacks to support PPO turning up, and then more importantly, zoom down to our, the reasoning for entering this trade. We have the 60-minute chart of the VIX here. This is a hourly chart, just a nice, clean, bullish falling wedge. Now, if it would have given me what I wanted, we would have just kept running after this breakout. But right now, as you guys know, if a falling wedge pattern is going to play out, it'll usually do so in one of two forms. It'll either take off after the breakout or break out and then come in and back test the wedge and then move up. So right now we're back testing. We're coming up on that previous reaction low. It's these positive divergences and everything else that confirm it and say we're likely to get a reversal here and hit some of those targets. And of course, TVIX, since you can't trade the VIX, let's get away from that and look at the official trade. It's going to look different. Again, it's trading near-term, short-term ETNs. It's also leveraged 2 times, so don't even bother looking at a long-term chart of this. It's not going to look anything like the VIX. Here's a 10-year weekly chart. This is why you don't hold these. Use these as tactical trades when you're expecting a pop. You want to any long-term hold on this should be a short. If you can get them from your broker and hold on to them that long, you basically would have lost all your money. You can see the pop-up box to the left, about 100% loss. I know statistically it's 99.999, but over time, this is what that decay I talk about, and it's as bad as anywhere in these VIX tracking ETNs, just due to the nature of the way they roll those futures, and also the fact that over time the VIX doesn't really go up. The VIX moves between range. It's sort of range bound. Think of it like the RSI indicator. You have these lows, and there's no definitive bottom or definitive top, but that's what it does over time. It just goes up when volatility is high, and then it returns back down low when volatility is low. So that's TVIX still looking fine, but like I said, that one will depend on what the market does. If the market doesn't roll over here soon, then that one, where were we at on that one with the stop? Let me go back to that real quick. 5-minute, 60-minute chart. Yeah, we're getting close, and I'm not going to give it a lot of rope. This market's doing crazy things right now. We're pushing the upper limits of where really this bounce should go before a decent correction. As higher we go up, the more and more indicators start flipping back. Intermediate term trend indicators, things like that, to bullish. So we'll just stick with this one right now for those trade parameters, and that's again suggested stop. It depends on your entry price, where you think things are going. You might want to use a different stop. They might want to try to run this down. This one, it's a little harder for them to pull directly. The market, the big money, they're playing with the futures. Most of them aren't messing with these ETNs. I just use this because most traders don't have access to the futures, and they can probably draw a trend line like that as well. But again, I put a much higher weighting in the VIX trend line than TVIX. I just wanted to say that. All right, next up we're going to get to RKDA at the end. Finally, let's go to UGAS. Go back here, UGAS, we did that on a 60-minute chart. Here's another one that, let's see if the chart loads here. Another one that long-term you are going to lose money. That's the only guarantee you have with trading this one long-term. So here's our trade base on the 60-minute chart. Again, we're within a falling wedge right at the top of it. And I can say this one's pretty popular, and a lot of traders watch this. And sometimes technical analysis, it's I don't want to call it a self-fulfilling prophecy, but if a lot of traders, it's not the right word, or term. But if a lot of traders are trading UGAS instead of nat gas futures, so nat gas futures are my preferred proxy. But if they're trading this, they're going to take it on a breakout. It's a pretty well-defined trend line, and they could pop it. So we're okay still. We entered somewhere here. We're probably about where we entered. I don't know the exact price. I'd have to look it up. But strong divergence. And again, this one was based on the futures chart. I'm going to get to that in a second. But let me just show you what happens if you tucked away money in UGAS. Let's say you back here in 2014 at this high, you bought UGAS. And you held on to it, you would have lost all your money. You can see the pop-up box on the left, 99.95% loss. And again, that's the contangos in there. You have a lot of fees and costs for them to go with the futures. So most traders, if you're seasoned, you have enough money and experience to trade futures, you get in and out. But look, these can be great trading vehicles. Number one, don't get me wrong, I wouldn't put it on. We've had a lot of successful trade ideas, very explosive trade ideas in this. If you get in at the right time, it will do better than nat gas futures by a good amount. And remember, I've talked about this in the FAQ page under ETF related questions. These 3-time leveraged ETFs, although over time they suffer from decay, you can actually do better, considerably better than a 300% return if you get in at the right time. And that's what we're trying to do here. You get in here, and when you have these nearly unidirectional moves, or if you short it and you go degas, you will do better than 3 times the underlying. And again, the math is explained how that works. It's in the FAQ page on the site, which is located under resources on the main menu. All right, so before we leave that one, let's look at nat gas futures. Okay, here it is, NG. These are the natural gas futures. Nice clean downtrend line, as you can see, which was clearly broken out. And that's why, again, even if you're going to trade the ETNs or ETFs, you want to look at the charts of the underlying when it comes to futures. So I see a lot that I like on this chart. Nothing's guaranteed, but this looks good. We had a very nice support level there, was broken, back tested from below, so it was resistance, so that helped to validate that level. And the other day we popped above the wedge and then gapped up on Sunday night above support. So it's that's about as impulsive breakout gets. Think of that as a big green candle, but even more impulsive because you gapped up. So it's a straight shot up. And then what did we do since? We came in, we hit my first target, overshot it by a little bit. That was 2704. Came back down and successfully tested the 2639 level twice, and now we need to break above it. So that's where this one's at. It's got a little work to be done. Still looks fine technically, but like anything else, doesn't matter how good it looks. Don't fall in love with it. It's either going to work out or not. So you want to see it break above 2704, and especially above that reaction high, since you have a reaction high close by. And I don't see a lot stopping NG till it gets up here at least 2840, and I actually favor over time working its way up here to 292-ish level. And finally, RKDA. This one's starting to get some traction finally. The story on this one, if you're in it, you already know, but if not, because it still has some potential, please read the notes. An extremely aggressive, micro cap stock, but I've traded it in the past, and this sucker can explode when it moves. And what I expect to happen, what I have been expecting since the entry, is to play a game of catch up to the rest of the sector. This is in the ag input sector. Most of those are fertilizer stocks, but you can see the chart. I think it speaks clearly. We had a nice, well-defined price channel. It is a whippy little stock, kind of does its own thing, and so it's prone to whipsaw signals. There was a false breakout. There was one, I like this breakout better because we had resistance at 380. You can see it right there. That was support. Support once broken becomes resistance, and I think this is where they got us on. They popped 380 and the downtrend line. I wanted to wait till the latter of the two was done, but what happened since? We've stayed well above our stop, and we back tested the channel or the trend line from above, and we've been moving higher since. And then last week we started to get finally what I wanted to see. This is an impulsive move, so a breakout back test and then impulsive buying. You can see the two big volume bars right here, and so far it's just digesting those big gains. I mean, that was a run up from the previous close. So we grab that candle. That thing rallied as high as 23%. And if you look at the candles, it's par for the course on this thing. So, here's a day from low to high that this thing went up 371%. So again, read the notes. I said don't put more into this and you're not willing to lose. This is Vegas money. But again, if you trade, whether you normally trade 10,000 or 100,000 a stock, you put in $1,000 in this thing, you can then allow yourself to have a big 30+% stop loss, because that would equate to, less than a 3% stop loss on a, depending on your position size. It's all about, that's the only way, in my opinion, to successfully swing trade volatile stocks that you're shooting for. In this one, if we hit our target, the final target would be a gain of about 60% or so. So again, we came very close to T1 last week, hit a high of 453, 10 cents shy, and I can't really say much else. Let's hope we get there soon. Your call whether you want to take it out. If we continue to see momentum in the sector, I'll stick with this one personally, and also leave it on as an official trade. Now let's just go through a few of the components in the sector. I'll sort these by market cap so you have an idea of the risk involved. The bigger the company, the less risk, relatively speaking, for the most part. All right, NTR Nutrien Ltd. And there's only a handful in this sector, so I've covered these in a recent video, I believe. Here's a downtrend line, but here's the point I'm trying to make. We're seeing a lot of momentum. A lot of these are starting to move. Look at this big impulsive candle, up about 4% today. It's got a little more upside. This is only a potential trend line because we've only had 2 tags so far. I'll probably get a reaction there, but I wouldn't bank on it. PPO is getting stretched, starting to roll over, but either way, right now, again, this is a point. RKDA hasn't really taken off yet, and a lot of these other stocks have been moving. And as I said, birds of a feather flock together. So let's look at a few more. MOS, this one's been up and down all over the place, but it trades well to the technicals. We had a divergent high here, Move that line, tell you that led to a big drop, about 15%, another divergent high, drop of about 25%, but it's been moving higher since. It needs to pop above this level here, about 32.60 or so. That's MOS. Let's go to another monitor I have here, FMC. This one had a nice divergent low. You can see there, bullish divergence. And has moved up, but it's now at downtrend line resistance, so that one needs to pop there. But again, the trend has been upwards in this. It's had a hell of a run. It needed to come back in, and what it wanted to do is backfill that gap, which it did. It's at resist, or now it just hit resistance. But again, the trend has been bullish. I wouldn't chase this one here. I mean, take it what you want. I'm just sharing these trade ideas if you want to take them. But also, I wanted to go over how the sector looks to make the case that the RKDA may still play out. All right, next up, be CF. CF Industries, what do you have here? That downtrend line should have been extended. There was a clean downtrend line there, and that downtrend line broke. So it's below that primary downtrend line. So there's sort of a mixed bag, if you will, in this. Longer term, this breakdown, the divergent high here and the wedge, that was all bearish. But you do have a downtrend line here that it's testing now, and it did have positive divergence down here on the RSI, which may be the catalyst to pop. Not my favorite, but again, keep an eye on it. It could certainly, if it can take out that trend line, and the market continues to rise, then this one could certainly pop to any of these levels. ICL, Israel Chemicals, nice uptrend line. This is basically, you had a divergent high right here, and that was your clue to get out or short it. There's an uptrend line, so if you like this one, you just simply buy pullbacks to support. It's not a very well-defined trend line, but we're here again for the third reaction, also the 200-day EMA. So if the sector continues to go, it's already had a healthy correction. Maybe it'll rise from here. So objective with a stop somewhat below, thinly traded. You can tell by these funky-looking candles. When you see these spotty type candles, that means low value. SMG, Scott's Miracle-Gro. I highlighted this one as a trade idea, a potential trade idea recently, and it broke out since then. So you have, let's see here, 1 second. All right, lost my drawing tools for a second. All right, you have a breakout so far and some consolidation right above the trend line and the 200-day EMA. So it's getting a little stretched, I can't say that I would chase it here. Personally, I wouldn't. I'll just tell you that now, but it is objective if you want to go long there with a stop below. Sometimes, especially some of these companies in this sector, overbought can become much more overbought. But again, the point I'm trying to impress here too with RKDA is look what the trend has been. A lot of these stocks are in a strong trend right now. If we can just milk a little bit more and RKDA starts to play a game of catch up, even if it's late in that run, when we get our target, maybe even hit T1 and get out. We'll see. I may close that out or leave it on. Depends how the sector looks at the time. A couple more and we're done. AVD, nice big strong bullish divergent low. And again, these guys can run. Look at that, 30% or so. Yeah, about 30% off the lows, but right into resistance. You can see this resistance line. So that one needs to break that. Could be setting up as a longer term trade. If this bull market has some legs or the stock market could go down, these guys sometimes do their own thing. Look at that. That would be a beautiful inverse head and shoulders bottoming pattern with a left shoulder here, head. If we get a right shoulder put in, then watch for the finalization of that right shoulder and a breakout above that 18-ish level that would project way up here. All right, next up, IPI. IPI is consolidating under a pretty big resistance level. Let me show you that one here. You have this line here, roughly 330-ish. You can see that is just a key level. This was a giant multi-year, about a year and a half long basing pattern or topping pattern, sideways trading. and we broke down. Once we broke, it was impulsive. That helped validate that as a very important support level, and we've kicked back to it now. But the stock seems to really, it doesn't want to go down. It's been hugging, building energy under that level. So maybe we can get back up in that channel, or maybe it falls down. And I could tell you this, it could be an objective short here. If the sector confirmed, I wouldn't short it here because the momentum right now is too strong in the sector. But if it drops out of the bottom of this range, you start to see some of these stocks roll over, it will be a failed back test of that key level, and it could open the door for the next leg down here at about 210. UAN, that's CVR Partners. Big symmetrical triangle pattern. You can forget about all the other lines for now. Just focus on this downtrend line and this uptrend line. And symmetrical triangle patterns can go either way. So you respect a breakout. An upside break would be bullish. Downside break would be bearish. Next up, AGFS, AgroFresh. Now we're getting down some little names. This one's about $110 million market cap. Bullish divergence. It hasn't really taken off yet. Needs to pop above those recent highs. Be careful with that one. MBII, downtrend line was broken, back tested, and it's kind of just holding its own here. It's not really doing a whole lot right now. Not my favorite chart. CGA, China Green Agriculture, divergent low. Bearish cross on the PPO right now. This one looks like it just, can't get any traction. Probably needs to clear this downtrend line with conviction here. This is a penny stock, so do your own due diligence. And I'm down towards the bottom of the barrel here as far as market cap goes. Caveat emptor, which means buyer beware. All right, SNES, another penny stock. Nice pattern. Bullish falling wedge, breakout, and just to get an idea how much you can get. When you take the breakout here, that thing rallied about 44%. So you take a small enough position that if you wake up one day and you see this thing's declared bankruptcy and it's down to 34 cents, you don't lose your shirt. That's the key to trading those low price ones, in my opinion. And I already covered RKDA, and that's about it. Other than that is the sector, which does have some resistance here, about 45.08. All right, we'll wrap it up here. This has been Randy Finney with Right Side of the Chart.